Okay, all right, welcome back. I mean, the market's not doing very much. It's down about 24 odd points, but to be expected after 2 days of very, very strong gains. 350 points in 2 days on the Nifty, and now it's a flat screen so far. Market breadth, I think, is come back into the positive, is swung back into the positive in a more definitive way. 350 odd stocks separating advances and declines. Sugar and the entire ethanol space, of course, has been in focus. Expectations of the Petroleum Ministry may soon revise the price of ethanol made out of damaged food grains. If this happens, how will this impact key players? Pramod Patwari is Chief Financial Officer at Balrampur Chini. He's joining us right now to take that forward. Thank you very much, Mr. Patwari. Good morning. Prashant this side. The capacity expansion in distilleries is something that Balrampur and others have been very focused on, and that is what many in the markets are also excited about. We had the petroleum minister recently making a comment saying that 20% ethanol blended fuel should soon be available at outlets, at fuel outlets. Could you tell us, what is your capacity now? I think you've recently commissioned another unit. What is the total capacity at right now, and how do you see these comments coming in from the government?
Good morning. Yeah, whatever capacity expansion we announced last year, all those capacities has been commissioned, and currently we are operating at our full capacity of 35 crores annual ethanol production. The recent comment came from the government of India regarding the availability of E20 blended fuel in the country in select cities is going to happen in some time, and we are very hopeful of blending percentage to increase from here on. In the ethanol season gone by, country has already achieved 10% of blending.
What is the kind of price increase that the industry is expecting? Currently, I guess the price is a little over 55 rupees a litre. In the medium term, what could the price rise be for ethanol?
Ethanol prices are set for on an annual basis. The current ethanol prices for the juice-based ethanol is around 66 rupees per litre. 55 rupees is for the grain-based ethanol made out of damaged food grains. And for B-heavy route, it is 61 rupees approximately.
Okay. No, I'm asking you, I mean, that of course is the current price, but from this 55 to 60 rupees a litre, what can the rise be? Can it be, in single digit? I mean, what is the expectation?
This is what I have said, that ethanol prices are announced for an annual, for a year. And those prices are already in place. Government is thinking of reviewing the ethanol prices made out of damaged food grains, which is currently standing at around 55.5 rupees per litre. So if any increase will happen, it will happen in that category only. Last year, government came out with some additional incentive in the mid of the year.
Right. So basically, this announcement with regards to, the ethanol price being revised for damaged food grains does not affect you in any way, because you obviously make juice-based ethanol and the prices for that are upwards of 60 rupees already. But there was another notification recently that came in as well, which said that the incentive will improve on ethanol production from Jan 2023. Wasn't the Food Ministry already giving 100% incentive to mills?
There is a two-part to this. First of all, this calculation is an internal matter as far as the Food Ministry is concerned. It is nothing but to give an additional benefit to those producers who are manufacturing ethanol by sacrificing the sugar either out of juice route or B-heavy molasses. So this was already in place. Maybe they are tweaking with some of the guidelines. And as far as our ability to produce ethanol out of grain is concerned, we do have the fungible capacity in place. If at any point in time our capacity permits, we will definitely make ethanol out of damaged food grains.
Okay.
And how is, sorry, go on.
No, what is, so from damaged food grains, I didn't understand how much is a percentage of your revenues from damaged food grains, and any kind of numbers that you can share with us on what this would mean for your, EBIT performance. It has, of course, improved if you look at it year on year. But can you tell us what is the expectation as we move along in the new year?
So the new distillery which we have set up at Majapur is having a capacity of 330 KLPD per day. If we assume that cane will be available for say 160-70 days, then it will produce around 5 crores liter out of cane juice route at that unit. So we have a balance of around 5 crores liter of ethanol, which can be made out of the damaged fruit grains at the Majapur unit.
All right. And finally, before we let you go, how are sugar prices trending? There were concerns on availability. That's one. And secondly, out of your export quota of roughly 1.9 lakh tons, how much is contracted already? At what prices?
Yeah, we have an export quota of 1.98 lakh tons. Out of that, we have contracted for export in the physical form around 1.4 lakh tons. And we are hopeful of evacuating this entire quantity by March, late March end. Sugar prices at this moment in time are currently in the region of around 36 rupees per kg in UP, and refined sugar we are selling around 37.5 rupees per kg.
Mr. Patwari, how is the sort of upcoming sugar season looking? Can you give us some sense? When we've spoken with you earlier, you told us that last year was actually the last 2 years, sugar years were pretty bad. Sugar yields were down quite a bit, rainfall damaged crops, etc. Could you tell us how are things looking this time?
Yeah, as far as our company is concerned, you are right that the last 2 years has been extremely washout for us because of the lower feedstock availability. But as we speak today, things are looking okay. So far, so good. We continue to maintain our guidance of around 15% increase in cane availability, which we shared with the investors community a quarter back.
Okay, all right, we will let you go on that note. Thanks a lot for joining in. That's the sugar space, but with the festive season now behind us and domestic cotton trading at a 25 to 50% premium to international prices, we aim to get a demand check from a key garment exporter. Siva Ramakrishnan Ganpati, the managing director at Gokuldas Expos, joins us now to talk about that. Mr. Ganpati, good morning and greetings of the season to you. I just wanted to understand first what's happening in terms of, the prices and the holiday season demand and pricing trends. Last time you said that in the coming quarters you're watching out for the holiday season closely. Has it been as per your expectations, and what is the demand trend looking like now?
So if you look at the US market, it has been doing reasonably okay so far, which is encouraging. Even though, the economists keep talking about recessionary trends in 2023. So far, if you look at 2022 till November, for which we have data, retail sales is about 7% higher than the previous year. And 2021 was also a good growth over 2019, that is pre-COVID year. So far, so good as far as the US market is concerned. Europe also, despite all the war kind of situation, last year on a low base of previous year, since last year was COVID impacted, Europe has also seen some growth. Now, what we need to look at is how is the growth projected to be in 2023 as we are looking at the future. And I'm hoping that, it may be a modest growth at this point in time. We geared ourselves for it, and since we focus a lot more on the US, which is the more resilient market, we seem to get a feeling that somewhere by Q1, we should start seeing some uptick from the current slowdown levels.
Till November this year, you said US retail sales are up 7% year on year. You've looked at, you've operated under recessionary conditions before as well. Could you tell us you said, and you're more US exposed, which is more resilient, and you expect modest growth. What is modest? I mean, 1-2% kind of growth or 5%? What's your expectation? And how does that, what is the swing for you based on these numbers, retail numbers?
So difficult to hazard a guess at this point because, we are all future gazing and crystal ball gazing, right? So in a normal time, I would expect ourselves to grow at, well in excess of 20%. But a modest growth would be, single digit percentage point. And I feel that at best, we would be under that pressure till, probably Q1, Q2 of the forthcoming year at worst, I'm saying, sorry. And after that, we should start seeing a good growth. So if I look at YOY, I'm reasonably hopeful that we should have a good growth, 2024 over FY24 over FY23, because the second half should be better. That's my crystal ball gazing for you at the moment.
Single digit growth, revenue growth in Q1 and Q2 FY24. and then things should start to pick up. And full year 24 over 20.
Pick up strongly in the second half of next year. That's what I'm indicating. Yeah.
So in a sense, basically, you've also kind of scaled down your earlier revenue projection of 2,300 crores, which would imply an upwards of 20% growth for this year, now to single digit, assuming that you do high single digit.
No. I'm so sorry. This year's growth is well intact. We will be in that ballpark between 2,200 plus kind of revenue growth. So that nothing takes away from growth in FY23. FY24, early part of FY24, we may see a slower start, and then in the second half, I'm anticipating that we will pick up with a strong growth in the second half of FY24.
All right. So that's about FY24, and FY23, you're saying there's no problem with regards to growth. Two things stand out in your business, and they're probably correlated as well. You can correct me if I'm wrong. One is the increasing contribution coming in from outerwear. From FY19, which is 30%, it's grown to around 41% of your sales. And the second is increasing contribution or increasing average sales price. So outerwear obviously is a higher ASP product for you. With the harsh winters in North America, do you expect this to grow faster than your regular growth? By the end of this year, what could the contribution of what could the contribution of ASP be, higher ASP products, and the contribution from outerwear?
So outerwear contribution has been steadily going up. It will reach a certain peak soon for us. Say, we probably would max out at about 45% or thereabouts. So as the outerwear share keeps growing, our ASP will also keep going up. We will have to have a balanced portfolio between outerwear and fashion wear and sportswear. So from that perspective, we will see that while outerwear demand has been fairly robust, and this harsh winter means that the stocks will go down in retail, so they will come back for more demand in the subsequent year. So players like us who specialize in outerwear will see reasonably good traction.
Okay. Since there is a bit of a slowdown globally, and you're also talking about a slight moderation, do you think the capex plan that you put out of 230 crores for the next 1.5 years, would you have to scale it down? I mean, would you look to do that?
So we have slightly, deferred it, but not really intend to scale it down at all. So the reason is that I'm very, very confident of the long-term trend. And when I say long-term, I'm saying even 1 year and above kind of trend. The whole movement of production into India is being endorsed by most of the brands. People like companies like Gokuldas is getting a lot of questions and queries and inquiries from customers. So I feel that we do have a solid future, and there is no reason for us to scale down our capex plans at all. On the contrary, I think we should start seriously contemplating acceleration of capex plans.
So this 230 crore capex that you've deferred, how long have you deferred it by?
Deferred it by a couple of quarters. That's all.
Okay, and this would mean incremental revenues of what, around 450 to 500 crores for you, the asset turns in your business?
That is correct. We will have an asset turn of about 4 times. That could be a reasonable assumption. So, but then the revenues also take a couple of years to pan out as the capacity has to come on stream and then ramp up. So that will be the trajectory. 500 crore plus will be the revenue expectation over the next couple of years, and it will keep growing.
500 crore plus is the revenue expectation from where? From your new MP capacity, the capacity that you're putting on board?
Capacity. We are also looking at knits capacity creation, some more additional capacities we will be creating going forward. So all of these start helping.
Okay, it's also that knitting facility in Tamil Nadu, right? What is the date of completion for that facility?
We are anticipating by end of Q1 or early Q2.
Okay. All right. We'll leave it there. Thank you very much, sir. Appreciate you joining in, and good speaking with you as always. So maybe, some pullback in growth because of what's happening in the US, but that's only for the first half of FY24 before things start to pick up again. But it's a solid story in the textile space. And now after the correction, valuations have come back as well, pullback as well. the market is in the green. We were down 25, 30 points only, so it's not as if it's a huge reversal or anything, but for what it's worth, things are at the high point of the day now. 18,136 is where we're at. We'll take a quick break. Mitesh is back with us to comment on the market, any new trades he might have, and we'll come back with that in just a bit.
Welcome back. It is flat as flat can be on the headline index, and Nifty is not doing anything at the moment, but it has recovered from the lows of trade, which is a good thing, but by and large just pivoting around that 18,100 mark. Mitesh Thakkar is joining us. Mitesh, what's the sense you're getting about the market for the rest of the day, and what are the stocks to look at?
So I think the market, basically is choppy, and I still believe that the pullback rally is continuing. Getting past 18,120, 150 zone, I think that should add strength, and we could even get to about 18,200, 3250 levels, which is where I think a strong supply will emerge. So overall, we still haven't broken down. I think the pullback rally on the hourly chart is going on, despite the fact that the first hour was slightly negative. Now on the stock side, I have two long side calls. Pidilite is reversing nicely from lower levels. So that's a buy with a stop below levels of 25.50 for targets of around 2600 to about 2610. And the other one which I like is Bank of Baroda. I think all these PSU banks have corrected now, are bouncing back. So BOB is a buy with a stop at 177.5 for targets of 186.
All right. You spoke about Bank of Baroda and PSU banks, bouncing back. Just keep an eye out on Can Bank because, as soon as the management spoke about 20% plus growth prospects, NIMs improving, etc., that stock's actually taken a turn for an upside turn, moved to the high point of trade with a gain of almost 3% off the lows. And most of the gains, as you notice, have come only post the commentary coming in from the management, rather bullish on the prospects of the industry and more so on his company. That's about Canara Bank and equities. Let's shift focus to the commodity space. Manisha, what's the commodity that you're tracking today? Yesterday you spoke about gold. Is it diamonds today?
It's aluminum, and we have seen good price response into this one as well. The month of November was positive, and December isn't too far behind because we are looking at strong moves here as well. But I really want to talk about on what aluminum clearly has done in this year. So with that report card comes in on your screens, we saw an all-time high at $4,000 per ton in the month of March, and from there it was a big correction in the second quarter of this year. 2,114 is what we saw as a low, currently trading at 2,400. With that kind of a move, we are down nearly 40% down from the all-time highs where the prices are trading currently, and we're down 15% in the year 2022 currently as well. The demand in the first and the second quarter was on the higher side, whether it came in from EVs, appliances, renewable energy, white goods, etc. People did a lot of future buying as well. There was a lot of vengeance buying as well happening, and that clearly supported aluminum in that sense. Also in the third quarter, there was a restocking happening, and that shows in the data because the CME third quarter physical trading volumes were a record 3,700 contracts on a daily basis there. The support in case of aluminum also continues from the fact that the EV demand is expected to continue. Earlier, it was 300 pounds per vehicle, but EVs need 500 to 800 pounds per EV, and that would mean that you are looking at stronger demand expectations going forward from here. The demand also arises out of China as well. Nearly 67 million vehicles are churned out every year. Nearly 48% come from China in that sense, and that is supportive. The other major point clearly this year has been power rationing, whether it has been in Europe or China, and that has curbed supplies or production into the markets. Smelting also is on the weaker side, and that has also led to some premium in prices. This is an important chart where you can see that China imports have declined on a year-on-year basis. So Chinese demand is not so great, but the exports have gained up by 299% on a year-on-year basis. So that means the demand from US, Asia and Europe still seems to be on the stronger side there. The support also comes in from the fact that the Europe and US combined capacity is cut at 1.7 million tons right now. That clearly accounts to 2.1% of global capacity. And when you look at only Europe, 25% of Europe capacity in sense of aluminum production is cut right now. The Chinese output is clearly a different number, 3.3% of a gain onto that one there. But another important data that comes in from the market is the LME inventories, which are at a multi-year lows at just about 481,000 tons there. The other data also comes in from SkyQuest Tech, which says that in 2021, aluminum sales were at around $142 billion. But with all the calculations and the kind of demand that they're looking at, it could be $240 billion by 2028. So very strong numbers coming in. And after copper, aluminum is the second metal that the markets are betting on for 2023.
All right, Manisha, thanks very much for that. Manisha, by the way, mentioned vengeance buying, right? I remember, Sonia, the first time I heard revenge buying was from you. This was, I think, in late 2020.
After
and I
COVID.
Said, yeah, and I said, well, you spend money on, how do you get revenge by spending money? But it's true. Right?
Revenge buying. You learn a lot from me, don't you?
I do. Every day, Sonia. I'm thankful. Thankful to sit next to you. And today I heard something else. Vengeance buying, right? So
We're here every day to teach you something new.
Absolutely. I mean, all right. Now, RVNL is the one which is in focus. The stock should come up on your screen. Vivek is here to tell us why it's in focus. So, Vivek, hi, over to you.
Well, that's right. So, in line with the very strong management commentary, that the management had given us on our channel when they were here last time around, in terms of, a lot of orders being back-ended in the second half, and, the company saying that they had a lot of strong projects in the pipeline. Another announcement has been made by the company to the exchanges yesterday. The company has received the LOA for appointment of the company being as a project implementation agency for implementation of the harbour project of Indo-Maldives. Now, this is a strategic project of the government of India, and which is why RVNL actually enjoys a preferred bidder status as far as these projects are concerned so far. The project cost is a little over 1,500 crore rupees, and the Ministry of External Affairs has been the awarding entity as far as this particular project is concerned for RVNL. RVNL has clearly stated that they intend to take the order book to a little over 1 lakh crore.
Okay, thanks a lot for that. Well, Sonal is also here to talk about India pesticides. Sonal, why are you watching that one?
Well, the stock is surging in trade today. Late last night, we got to know that the wholly owned subsidiary of the company, that is Shalvi Specialities, they received an environmental clearance, and this is for one of their projects in the state of Uttar Pradesh. So they will be manufacturing variety of products there, agrochemicals and intermediates, API ingredients and intermediates, and fine chemicals manufacturing as well will happen at this particular unit. We still need to understand what the capacity here is, but the street definitely is very excited by the prospects here. In 2021, Uttar Pradesh government had spoken about this, where the proposed project was worth around 250 crore rupees, and production at the plant was supposed to begin in next 5 years. Now, with the clearance coming in, maybe it could start earlier than that, and that's why the excitement here. We spoke to the company just in the month of December, where they will see margin improvement in FY24. Exports will see a growth of 40% in FY23 itself, and they expect 30% growth in FY23 and more than 25% growth in FY24.
All right, Sonal, thanks a lot for that. So that's about India Pesticides stock up almost 10%. But the other stock which has been buzzing around since morning is Jubilant Pharmanova. Ekta told us that there was a management meet with a broker. Ekta joins us back again to tell us more.
Well, yes, Jubilant Pharmanova was in focus or is in focus because Nirmal Bang, in fact, met with the management. A couple of important takeaways. The radio pharma business, which is basically nuclear medicine, is back to pre-COVID-19 levels. It's expected to grow in double digits from FY24. Growth via new launches and ramp up of Ruby Fill, which is basically used for PET scans. Allergy business, which, remember, they are one of the sole producers of venom extract products in the US. Double-digit growth and healthy margins is what they're expecting. Generic business facing headwinds when it comes to pricing pressure. Margins expected to improve Q-on-Q with product realizations, new launches. CDMO sterile injectable business. Double-digit growth FY24 on due to a strong order book as well as capacity addition is what the company is guiding for. Nirmal Bang has a buy with a target price of around 432.
Okay, thanks a lot, Ekta, for that. Well, let's do one thing. Let's take a quick break. On the other side, SN Goel of Indian Energy and Exchange, or rather IEX, will join in to talk about the outlook on their business going forward. The company is exploring business opportunities in the carbon market as well. More on that coming up.
Welcome back. The stock on our radar is IEX. Has been an underperformer in 2022 with a cut of almost 45% and there have been a bunch of reasons for its underperformance. The first one, of course, being the introduction of a couple of new power exchanges, and secondly, trading volume softness coming in as well. The stock's doing better in today's trading session, but as you see, in the last 1 year, down almost 45%. But there's been a business update. They've actually formed a subsidiary called International Carbon Exchange to explore business opportunities in the carbon market. This platform will allow trading of various types of green products, the kinds of carbon credits, certificates, as well as emission reduction products. So to discuss the potential of this and business prospects, we do have with us Mr. Goel, who's the MD and CEO at the company. Thanks a lot, Mr. Goel, for joining in. That is really the first question. What's the kind of opportunity that you expect from the carbon exchange? Which international agencies recognize this? And how much potential or the depth does the Indian market have for this?
Good morning. As you are aware that under the Paris Agreement, all countries have taken some NDC targets for carbon reduction. India also has taken very challenging targets. For meeting these targets, there is going to be a mandatory carbon market, which will be regulated by CRC, and IEX with other exchanges will be doing mandatory market carbon trading. But in addition to that, we see large number of corporates, multinationals, they have also set a very challenging target for themselves for the carbon neutral and net zero. And to comply with that, they are buying carbon credits from the market, in the voluntary market. As of now, what we understand that almost about 50 crore units of carbon credits are being traded every year. And by 2030, this market is going to grow to almost about 1,500 crore units. And India is a large supplier of carbon credits. So we see good opportunity in this market. Buyers are mainly in the European and US countries. India is a big supplier. African countries are also suppliers in this. So we see good opportunity in this market. That is why we have now launched this subsidiary company, International Carbon Exchange, with the intent to do trading in this market.
So in terms of a timeline, what are you looking at in this carbon market? I mean, when can you sort of start? And over the next 1 to 2 years from this subsidiary, what is the kind of maybe earnings that you can generate?
We will be launching this company, business in this company maybe in the next 5-6 month time. Our target is basically on 27th of June, IEX will be completing 15 years. So that is the date we are targeting to launch this operation of the International Carbon Exchange also. And as far as the business opportunity is concerned, opportunity is big, but it all depends on, we have to initially create a credibility for this company in the international market. As far as IEX in India is concerned, it is well known, but in the international market, we will have to create that credibility and our networking with the buyers and sellers. And also, there are international registries who are registering this carbon credits. So we will have to also interact with them. So very difficult to say what kind of opportunity is going to be, but we see good business potential.
Right. The total, there was a Financial Times report which said the total market for voluntary carbon credits is about $2 billion in 2021. So that's the total size of the market, right?
Yes.
Okay, got it. Now, Mr. Goel, for our viewers, and we get a lot of questions whether on IEX, because it did so well, and then, of course, it has gone into a bit of a slump, especially after what we've seen in 2000, this year and the previous year. A large part of the problem was very high prices, power prices, right? Which one thing led to the other. There was a cap which the government had imposed. Volumes dropped on the exchange because sellers did not want to sell at that price. Could you give us some indication of what you're seeing in FY24 and from here on, FY24 onwards? What kind of earnings growth are you expecting given the situation now? Go on.
Yeah. So this year particularly, energy market conditions were very, very challenging world over. Energy prices have increased. In fact, power prices, if you look at the European countries, the increase was almost about 3-4 times. Imported coal prices had increased of almost about 5 times. Gas prices increased by 10 times. So there was shortage of fuel in the market. And as a result of that, the pressure was on the domestic coal. Coal India did an excellent job. They increased the production by almost about 16-17%. And that is why we were able to meet the demand of the power in the country. But input cost itself was quite high. And
Mr. Goel, looking forward, sir, look forward for us if you can. What you've described is what has already transpired. with situation much better now, right? More stable at least.
Yes. So in the last 4 or 5 months, the coal production has improved and prices have come down now, which was 7-8 rupees in the month of April, May. They are down to almost about 5 rupees now. And if this coal production trend continues in future, in the next year also, I'm sure the prices will be back to 4.5 rupees. And this year our volumes are flat. As of now, they are -4%, but I'm sure we will be able to make up that in the coming 3 months. And next year we should see good volume growth.
Could you define, good volume growth for next year? And this year you said so far you're -4%. You will make it up. So you end the year flat or with minor growth?
No, we will be almost about flat by end of the year.
And next year, what is your volume growth target?
We are targeting a volume growth of almost about 15-20%, but that all depends on the availability of fuel in the market.
Okay, the 15 to 20% growth would be positive, but a couple of triggers that everyone had for IEX going forward was the introduction of long duration contracts. Can you tell us how have volumes panned out there? What's the traction? When is it likely to pick up?
We started this long duration contracts in the month of July, and some transactions have started happening in this market. But because of the high price in the market, many distribution companies are not willing to get into long duration contracts, I mean monthly or quarterly contracts. So, and again, when the prices cool down, I am sure in the long-term market also, long duration contracts also, the volumes will increase. Next year, we should see good traction in this market.
Okay. I just had one question. There are two new players, two new exchanges that have come through. Is there any pressure that you're seeing in terms of market share because of Hindustan Power Exchange, the Power Exchange of India? Any predatory pricing that's taking place currently?
No, PXIL is there right from 2008. In fact, they are 15 years old. It is only SPX which started last year. This year in the month of July, they started their operation. And I don't see any impact of that on our business. See, in India, exchanges are doing only about 7% of the total generation in the country through the exchange. Whereas developing countries, the market size is almost about 40-50%. And there is enough opportunity for 3 exchanges. And our market share also is around 90% as of now. There is no impact.
And what's the update on the gas exchange? I mean, that was another trigger?
Yeah, gas exchange is doing wonderful. I mean, in the first year of operation, gas exchange achieved break-even. Last year, we did almost about 1.2 crore units of MMBTU of the transaction. This year, in the 9 months, we have done almost 3 times of that.
Yeah.
And gas exchange this year is going to make good profit.
Right.
And as you are aware that the government of India has set a target of increasing the share of gas in the energy basket from 6% to 15% by 2030.
Mr. Goyal, got that. So that's an opportunity. Volume growth of 15-20% should result in at least 15% earnings growth as well for 24?
For IEX?
Yes.
Yes, definitely. The volume growth happens by 15%.
Okay.
Earning growth.
I've asked this before as well when you've been a few months ago. Globally, free market pricing of energy has come under pressure, right? We've seen things transpire in Europe, etc. Here we've seen price caps of 12 rupees earlier, which was a big blow to exchanges like yours. I mean, there's no surety that that doesn't come back, right? It all depends on underlying input prices, etc.
See, this price cap was introduced because the price had increased
yes,
to
that's what
about 18-19 rupees.
Yes.
But now government is thinking of introducing a high price day-ahead market, which is SP DAM. And we have already applied to regulator for approval of that product. So, I mean, generation like, gas-based generation or imported coal-based generation where the variable cost is high, they can participate in this market, and during the crisis time, distribution company can purchase power during the peak hours under this high price DAM market. So that is going to be another opportunity.
Okay, day ahead market, you've applied for it. Thank you very much, Mr. Goyal. We are wrapping this up, but had a few more questions next time. Thank you very much, and all the best for the new year from all of us here at CNBC-TV18. Happy New Year, sir. We'll speak in the new year. Thank you. So that's IEX for you. It's a wrap on this edition of Bazaar. The market, by the way, is back down about 30-35 points. Lots more coming up on Chartbusters in 2 minutes.